And let me reset the mic because apparently it's not working. All right, how about now? I think the mic's working now. All right, so good morning, good morning. Hope everyone is doing well. And we are taking a peek at what's going on with the S&P here this morning. All right, so let's get to it. First up, we continue to be in chop, right? We continue to be in chop. And as long as this is a choppy environment, remember, one day the bulls are going to feel like geniuses. The next day the bears are going to feel like geniuses. We are bouncing off of the range of support. This candle here is the Monday candle. Please know that when we looked at the initial, let's go take a peek at Sunday. We did have a fairly dramatic move to the downside on the open. Remember, we closed Friday basically evening, whatever you want to call it, right? Late afternoon, evening. I don't know. What is that time between 4 and 6 p.m.? I'm sure there's a definition, but remember, we're always seeing equities Monday through Friday with that large gap in trading time, but the futures don't. The biggest gap of time, and therefore also from a risk perspective, the biggest risk to futures traders is what happens to sentiment between Friday when the futures close and Sunday when they reopen. And you can see since the open, we've been rallying higher, and you can see the overall strength after the move lower. All right, so that's what we're inheriting this morning. Another thing I'm going to mention on this move, and this is really more about volatility. All right, now there we go. Now when we take a look right here, look at the candle on the far right chart and the far right candle. We've already traversed the typical daily price movement range. So heads up, gang, even before the bell has rung, right? Even before the bell has rung, NASDAQ, S&P, before we even get Wall Street throwing in their 2 cents, right? We've already seen dramatic moves higher on the broader averages. Now, we have a couple of things to keep in mind. Bigger picture, yes, this was going on over the weekend, steel and aluminum tariffs, whether you want to look at it as retaliatory tariffs, reciprocal tariffs, whatever the R word you want to pick. And we're getting this back and forth ping pong game of tariffs. Equities don't seem to mind. And this goes back to what I was mentioning a couple of weeks back with the psychology that happens when something happens for the first time, right? When we get shocked by, oh, what's the reaction to fill in the blank? And if whatever that is happens again and again, for example, with tariffs, the subsequent times we hear about a particular narrative, unless there's something new to that narrative, the reaction starts to become a little bit like, oh, been there, done that. And you can already see that happening within a couple of weeks. The market shock, traders and investors, oh my gosh, that reaction's really waning. So keep that in mind. The first time something happens, watch it. Okay, this is the reaction. How long does it stay up or down? How quickly can it recover? What does it recover on, etc.? And then subsequent, in this case, a release of news really isn't all that. It's not bearish at all. In fact, we've already moved the typical price movement range for the day by 9:05 a.m. All right, so let's go take a look at what's going on with some currencies. A lot of talk about the dollar, a lot of talk about the yen. The dollar continues to be strong for really 2 reasons. On one hand, remember that it's always the dollar versus something else. One of the clearest lack of understandings around currency trading, and I was there once. I'm going to tell you how I decoded Forex and currency trading a couple decades ago. We're always looking at 2 things, always a unit of 2. There's a euro on one side, there's a US dollar on the other. There's a US dollar on one side, there's a Japanese yen. So there's no such thing as saying the dollar is strong or the euro is strong or the yen is weak. That's really not a complete conversation. It's what is it strong or weak against. So I always use what I've taught is this airport analogy. If we land in, I remember landing in, took my mom and my sister to France on a speaking engagement. So we land in Charles de Gaulle. I've got dollars and I need to convert them into euro. And I don't say, well, the dollar's strong against the Canadian dollar. They don't care, right? They know what the dollar exchange is versus the euro. And that's what we've got to think about. We always got to think about the exchange. So in this case, the US dollar is stronger than the euro. The US dollar continues to strengthen because the Federal Reserve is just about done cutting rates. Rate cuts are in general very, they're weakening. They're bearish to a currency, and rate hikes are bullish. So as we wind down the rate cuts, the weakness to the currency of the country, the central bank is lowering rates of, that's going to start to stop. And then we start to see a leveling off. And then eventually, once the rate hike conversation begins, we start to see the strengthening of the currency. So the currency right now is quite strong against the euro. Now, why does that matter? When we talk about the US dollar basket, it's 6 currencies and 58% of it's euro. So if you want to know what the dollar is doing in the most undiluted way, you look at its relationship against the euro, which also solves another problem for a lot of traders who want to look at the dollar via the whether that's Forex, use euro versus US dollar, or the futures. DX futures are tough to pull up on certain platforms. It trades on the ICE, but the 6E, the euro, trades on the CME, and most folks will have access to the 6E. So if you want to know what the dollar is doing and you don't have dollar index futures, no problem. Use the euro. All right, Canadian dollar. Well, this is interesting, right? Okay, does this mean the Canadian dollar is strong? No, not necessarily, but it has been strengthening over the last well, it's been a good February for a currency called the loonie. There's a loonie bird on the currency of the Canadian dollar. And if you take a look at what's happening here, look, if I'm looking at the currency like this, it looks very different, doesn't it? The context matters. This is the context. The context for us, for our purposes, is the trend. So nice little bounce in a very weak Canadian dollar. It continues to be exceedingly weak. Right? It's had a good February so far, but it's still very much a bearish chop at this point that we're dealing with. All right. So here we go into our questions. Thoughts on Lyft, Bob? I do not. So if there's something going into earnings, if anyone's been watching this show for any period of time, let me give you all a little breakdown into the way I look at here we go. Let's open this up into earnings. So let's open up Lyft on the daily time frame, and then we'll go from there. All right. So first of all, when it comes to earnings, I don't play earnings. I think it's a terrible idea to make a binary play on a massive event. Lots of people do it until someone's out there going to release an entire quarter, if not a couple of years, or give me 3 quarters, 2 quarters of earnings results. This is not a tactic that is going to help grow an account, right? And you're not going to hear many people tell you that. Everything we do is looking for a trade as a stepping stone to growing our account. I do not feel in any way, I've not seen the data, I've not seen the consistency and results to say that trading earnings is actually a good idea. So my thoughts on it, Bob, really simple. And thank you for the questions. I think a lot of people are looking at a stock with earnings coming up and saying, hey, let's put on a trade. Not what I would ever recommend. So I have 0 thoughts on it on Lyft. In fact, even before earnings, this would not be a stock that gets my attention. The earnings are coming out tomorrow, by the way, after the bell. So if there is a window post earnings that someone out there might say, Rog, but I like the narrative, I think there's a whatever reason, that's cool. I don't particularly like it in terms of structure now. I don't know that earnings is going to clarify anything, but if it does, if earnings are coming out tomorrow after the bell, don't touch this on Wednesday. The first day I would even consider something with Lyft in terms of a timing perspective would be Thursday. All right. But gang, do yourselves a favor. Don't trade earnings. And be really, be really, really critical of any style. I'm always critical of different styles of trading. And I've just gotten to this point now at this stage in my career, 3.5 decades in, my job is to find trends. That's it, right? It's not to trade chop. It's not to sell premium. It's not to look for income. It's, meaning I'm doing some sort of process of writing premium and none of those things. My job is to find trends, buy low, sell high. And the more I stay focused to that, I know when to trade. I know when to slow down my trading. I know exactly what it is symbol-wise that I'm looking for. Am I always going to win? Oh gosh, nobody always wins, right? Nobody. But the probability of growing an account is far better if we're focusing on trends. And that's, at this stage of my career, gang, I don't think I'm at the tail end of my career. I hope to trade for another, I've been trading for 35 years. I hope to trade for another 35. But this second half, if you will, is not going to pretend that we can be good at all things. The second half of my career is going to be saying that, look, the environment that the vast majority of traders and investors benefit from are trending environments. Find a trending environment, find a trending stock, find trending time frames. If it's on a daily, maybe it's a weekly. If it's not a daily, maybe it's in 1 hour or 5 minute. Focus on those. That's where the account growth is going to come. So if you might say, Rog, is the S&P an account growth name? Oh gosh, no, right? Absolutely not. In terms of what we see here on the S&P in December, that was a trend, right? You can see here much stronger November. When I see a lot of yellow candles, when I see red candles, we've lost the uptrend. And by the way, our uptrends and downtrends of equal value to us as traders. Not even close, right? Not even close. I have no illusions that this environment, the S&P, is inferior to, say, this environment in the XLF. Right? So ultimately, what I'm going to look at here in terms of financials is a probability of potentially moving higher. Right? What I'm going to look at in any sector or symbol that's got the potential for trend. So here's potential trend. All right, this is the XLB. Is it looking bullish? Yes. Is it a trend yet? Not quite. So this is potential trend as opposed to the financials in an uptrend. KRE, this is a trend very early in its cycle. It broke the downtrend, it went neutral, and now it's trying to turn into an uptrend. All right, what about gold miners? It's a sector I really like. This is a trend. And everything I'm looking at here, gang, is really happening in one easy little space. I'm going to grab my drawing tools here. One easy little space on the one second here. There we go. It's my drawing tool. Right in here. The top row is momentum. And when the top row is green, it's bullish. Gray, which practically it's invisible, which I love. That's neutral. And when it's this magenta color, it's bearish. That's the top row. Colors apply in the same way in the bottom row. That right here tells me which direction I should expect price to move in. Directional bias. The structure gives me directional bias. The color of the candles gives me directional bias. The higher highs and higher lows gives me, again, directional bias. The gray zones here give me the zone from which I want to buy the dip. The gray zones basically define the dip. And that's a big thing that we need to do as traders. How are you defining the dip in order to buy? Or if it's resistance, why would we be bullish? Why would we focus on dips? Why would we expect the continuation to be upwards as opposed to dealing with chop or bearish? If you knew the candles were consistently red on GDX back here at the end of October, long puts and long puts only. Once they go green, long calls and long calls only. And that's the kind of confidence and really bullish or bearish, never both and never really neutral. There's no such thing as, price is not going to go anywhere. It's going to go somewhere, right? Even if it's a narrow range, there's still a ping pong between levels. Once we start to understand that, all of a sudden, managing risk. Notice I didn't say making money. Managing risk becomes much more possible. And if you can manage risk, on the flip side of that is your profitable account growth, gang. In fact, it's finding the top 2 or 3 things that are keeping you from account growth that allows you to grow an account. And yes, I'm going to put steer clear of earnings as definitely one of those things. All right. And look, some of this advice might seem very different than what you're hearing. And I'm by no means saying you can't do those things. But if your account isn't growing, and I mean year after year, not, this was a good month and last month was a good month, taking year after year. If your account isn't growing year after year, maybe think about what it is that you're doing that's keeping you from it. Everyone out here has a set of skills they're probably really good at. So rather than trying to be good at 9 things, Can you go all in on maybe one or two? And that's what I'm saying. Go all in on trends, most definitely uptrends. It's not as if uptrends and downtrends are of equal value. They're not. In fact, downtrends happen for very short periods of time now. Being a perma bear is about as ridiculous a thing as someone can be. All right, let's go take a look at Meta. Sure. When we talk about strength in this environment, Meta, yeah, okay. This is what a trend looks like. All right, Rob, point it out to me again. You bet. Here we go. That's number one. I've got bullish momentum that's been turning on and off for the better part of the last month, right? The trend kicked in. Awesome. So the trend's now there. How long have we had, look at it this way. How long have we had no red candles, right? That happened through early December. So it's not even a matter of how many green. How about something really easy? What don't we have? No red. All right. How about how long have we not had any yellow candles? So if red is bearish and yellow is neutral, how long have the green candles dominated? And even more specifically, how long have we not seen yellow candles? Well, if we have at least 5 of those in a row, that's bullish, gang. So how long would it have made sense to be bullish? Practically the last 2 months, right? And then where do we want to be bullish from? The gray zone. And that's what I mean about, we had a webinar on, was it last Wednesday evening? We're going to have another one, by the way, at 2 p.m. this Wednesday, right? And a lot of what I'm doing is automating, not automating my trading. I actually don't believe in that. I'm not a fan. I won't do it. I won't ever recommend it. But I want to automate analysis, right? Because automating analysis does a few things. It becomes more accurate. It's quicker. It's less emotional, right? We take the things that we would do if we were unemotional, accurate, unbiased, never wrong, right? Following the process perfectly. If we could do those things as humans, I know I'm going to fail on that from time to time. What I do is I take the best of myself. What are the processes? What are the patterns? What are the things that I know I would do if I was completely unbiased and never wrong? Well, I automate that. And so when you do that, it speeds up the learning curve. So now you're not thinking, oh my gosh, Rog, it's going to take me the next few years to learn this discretionary and subjective type analysis. Oh my gosh, Rog, I don't see why we're bullish now. Cool, the candles will tell you. If you can read a traffic light, you can do what I just did on this chart, and it becomes really simple. Oh, we want to be bullish. All right, what about Amazon? What about Amazon? Not as bullish as Meta, but in fairness to Amazon, we just had earnings. Earnings came out, as you can see, after the bell on the 6th. So we give a stock at least 1, if not 2 full sessions after earnings to let it simmer down from all that information, and then we'll re-engage. And so, yeah, we're getting close to looking at Amazon in terms of a potential buy. All right. Focus on the trends. Amazon is not as good a setup as Meta. As long as we can create that hierarchy of what's trending, right? We're going to be fine. We focus on the things that grow our accounts. And if you want to know more about that, all right, Rog. Yeah, tell me more about what you're looking at and how you're doing it. We're going to be doing that at 2 o'clock. I've never done an afternoon webinar. Pretty stoked about it. I think it's going to be great to be able to talk about how we trade during trading hours. That's kind of cool. I'll be sharing a lot of tips and examples, strategies. A lot of folks ask, Rog, you showed us the last, 16 months, 18 months in the last webinar. What about August, September, October, November, December, January? Well, so we have 2 webinars. I'll be coming back with even more data about our Sector Secrets Masteries trades, our setups. In this next webinar, new trade examples, a lot of questions about S&P and the myriad of ways you can trade the S&P, more about index sector stock. Y'all are going to love this new slide deck as we get closer and closer to the immersion that's starting this month. All right, so imagine me basically pointing out trades, holding your hand, coaching you through the next 3 months. That's what's coming up. You can learn about that and how we've been doing in the mastery on the 12th at 2, simplertrading.com/consistency. All right, gang, be good to each other. I'll see you tomorrow, same time, same station.